Cash flow, how money works and finance explained, building the billionaire brands with digital real estate and growing our billionaire brands. Day 143 of the Billionaire Challenge. Welcome to Mortgage Mastery Monday, where again, our goal is to build billionaire brands with digital real estate, kindness, and knowledges. Adrian Mays in day 143 of the Billionaire Journey. As we dive into lessons by Robert Kiyosaki, and learning about how money works and how we can build our billionaire brand. It was a great reading this morning about milestones. Milestones give meaning to a journey and help us to not only savor each small step, but celebrate the leaps and bounds that catapult us forward. And this is found in the Rich Dad Poor Dad book by billionaire Robert Kiyosaki, What the Rich Teach Their Kids About Money That the Poor and Middle Class Do Not. So we're re-engineering how the education, employment, and retirement system here with CCC Because We Care Foundation. And why not have a billionaire share with us these strategies on how to do the things that the rich do and not the poor and middle class, and bridge the gap in regards to your pocketbooks. So in this live here today, we're going to talk a little bit about how money works and understand dedication to parents everywhere, a child's first and most important teachers, and to all those who educate, influence, and lead by example. That's literally what we have to do and raise our hand in regards to change. So Rich Dad's lesson number one, billionaire, Robert Kiyosaki, by the way, the rich don't work for money. So if we look at that concept for Mortgage Mastery Monday, and we kind of take that a step further, the increases in income are going to entrepreneurs and investors, not to employees and not to the people who work for money. So we're going to break it down today in regards to understand how money works and explaining finance and the basis. But the Rich Dad lesson here today are savers are losers. Now, why are they losers? We'll cover that in regards to understanding a picture is worth 1,000 words. Now, the dot-com crashes in 2000, the real estate crash in 2007, the banking crash in 2008. What that looked like here is the Dow Jones. Now, the Dow Jones is one of the best and oldest known indexes. Now, it's a large stock market and gives you an idea of global confidence. Drop in the comments if you're actually familiar on how to read the Dow Jones Industrial Average. Okay, we'll pause there. But the takeaway is that if you can take a look at the graph, is over the long term, fundamentals trump fear. So again, no pun intended. That was funny when I read that today. So again, no pun intended in regards to understanding the basis of how money works is going to trump the scariness, the ride that you can actually encounter if you don't take on this opportunity. So between the 2000 to 2016, the banks kept cutting interest rates and printing money. So the rich were saving themselves and threw the poor and middle class under the bus. Now, this sounds common, right? And so when we understand that concept, the Rich Dad lesson, your house is not an asset. So we're going to dive into a little bit about understanding and the explanation of money and finance and understanding how money works in a general basis. And so what we're going to cover here today is a little history of money and finance. We're going to talk about the types of money and currency, the functions of money, and look at the financial system, the types of finance, and wrap up with some key terms, as well as tie in the Rich Dad Poor Dad's lesson in regards to understanding. So the whole basis of this live here today is the key is to, before we get into the cash flow game and have fun in regards to getting out of the rat race, we need to understand the functions of money. On Mortgage Mastery Monday, comprehending these basic concepts of financial systems and then using appropriate terms to explain money and finance, and then applying the knowledge when we get to the game and the fun part to personal financial decisions. So understanding why should we even learn about money? Why should we even take this on as a factor in 2024? Money and financial markets allow us to have commerce and trade, investments, growth opportunities. Make sure when you go down to the bank, you have some zeros in your bank account. So they aid in the creation of businesses and help. It doesn't matter if you work a 9 to 5, if you work from home, if you're working as an entrepreneur, it allows you to provide a means to acquire resources to live and thrive. So early examples of money in finance, early Sumerians kept financial transactions that included ownership and rental of land, agricultural labor, and loans. So cowrie shells were once used as a form of money back in China. And in ancient Rome, temples were the financial hubs of major cities. So that's way back before you can even remember about understanding how money works. But why this is so important is, again, when you're building a billionaire brand, you want to know where you're coming from, where you are right now, and where you're going. So the barter system is the oldest form of commerce. Understanding bartering is just the exchange of goods and services between two or more parties. So an exchange takes place in regards to the values of goods or services. So can you think of reasons why the barter system is no longer widely used? I mean, think about it. Nowadays, even if you go on Facebook, TikTok, YouTube, Instagram, if you go on X, any of these social media platforms, if you don't know your value, or if you do know your value, then either way, you have to exchange some type of good to help someone accomplish something that they could not do before. So money, that's what we come down to. Money, my friends, the big green. And what is money? Money is anything that can be used as a medium of exchange and accepted as payment for goods and services. So money is used to buy the things we need to live and thrive on. We're talking about a billionaire goal in regards to your building your brand, personal or business. But understanding that money is that commodity and it has value, just including tea. It could be gold, it could be cattle, but these are all types of gold, types of opportunities that paper and coin is what we have today. But that's what they used in the past. Think about it. If you had some cattle that you wanted to exchange and you had something that someone else needed, and I had two cattle, and those two cattle can actually provide some beef and some other things that can feed my family, that's called the commodity, an exchange of goods and services for the value of their use. So if you take it a little step further, how is money used? Money can be used in three different ways. Number one, a medium of exchange. Money is accepted as payment for goods and services. Number two, store of value. Money can be saved for later use. And number three, a unit of account. Now, money gives us a standardized metric that allows us to measure the value of things. So again, if you understand these concepts on Mortgage Mastery Monday, when you're going down to the bank or you're going to your loan officer, you're going to actually do an investment, these are the basic foundation of things that you need to grow and build on. So the gold standard, money used to be backed by gold, meaning each dollar was redeemable for a specific amount of gold. But the US Reserve couldn't issue more money than what it had gold reserves. So like billionaire Robert Kiyosaki just shared with us is they've been printing money to actually put it into the supply, which has caused different problems in regards to our economic growth. So the current form of currency is considered fiat money, meaning its value is established by the backing of a government. The health of the economy backs the dollar value. So with economic stalls, hence COVID, the dollar can decrease in value through inflation and international exchange rates. So right now, the value of the dollar is not as strong as it used to be years ago. So by definition, a system of perceived value for the exchange of goods and services. That's what money is. So some of those examples, the US dollar, euro, Japanese yen, silver and gold coins, and cryptocurrency. So currency, the definition, is a physical form of money issued by the government and used within a particular jurisdiction. Currency can lose value over time. And again, examples, the US dollar, the euro, the Japanese yen, or other physical forms of money issued by a government. Why is all of this important to understand these opportunities? You gotta know how money works in order to get to building it for your financial growth opportunities. So what is finance, Adrienne Mays? Finance is the management, creation, and study of money and investments. So if you check out on my page talking about tax foreclosure auctions, or if you talk about building billionaire brands, or we're talking about giving away to charities, even talking about the cash flow game with Robert Kiyosaki, all of these things and understanding money and finance, that's the basis. Because again, finance allows us to borrow and lend money, invest, raise capital for a business, and trade on the market. Because of this system, we can fund these acts of kindness projects. We can actually have opportunities like Smile Don't Blink Photo Booth in different activities to grow by repaying in the future. So with finance, we can buy homes, cars, and pay for those travel vacations, but do it smart And we can also build a business. And understanding these key things allows you to understand the lenders and the borrowers. Now, as a mortgage broker, former mortgage broker at one of the top companies in the country, understanding lenders and borrowers. So if you're lending money, that's anyone from a corporation to individuals. That's the name suggests. They lend money and in exchange for charge people interest to make it worth their while. If you look right now in the mortgage system, interest rates, if you go down to your bank or if you go to any of the companies that do mortgage loans, they're 7%, 8%, even 9% in regards to the interest rate that they make on their money. Now, the borrowers are the people that I'm speaking to. The people who borrow money are called loans from lenders with the intention of paying it back. But pay yourself first. That's one of the concepts you have to do. And that's what you do by watching these type of things. Because again, understanding how money works, money is borrowed to invest in capital for business growth, purchase property, and to pay for other goods and services. So lenders and borrowers usually come together through these banks, through the bond markets or stock markets to actually get you as a client or a borrower. So when you understand the types of finance, there's three different types. Now you have public finance that includes the tax systems and the government spending, the budget and the debt. We went over a few days ago in regards to the US debt clock on understanding how that works. The government also borrows from banks. So when you understand the public finance, then you have corporate finance, the management of assets, liability, budgets, and revenues, businesses acquiring financing through investments, loans, and lines of credit to build your business. Great example with Smile Don't Blink photo booth. Unica Gaines, the owner of Smile Don't Blink, was just recently approved for American Express business card. So when we build our business, we're able to actually capitalize on the different points that are available as Sky Miles. So when travel is actually included in usage for our business, then we're able to kind of redeem those things in regards to miles and traveling and keep reciprocating the process. Then number three is personal finance. All financial decisions and activities made by an individual or household includes spending, budgeting, saving, investing, and loans. In the Random Acts of Kindness community, we're going to go over, before we close here today, just a simple budget that you can actually utilize that is parallel to the cash flow game. So in other words, understanding an income statement, understanding a basic balance sheet. These are the things that the cash flow game teaches you in understanding and the growth and opportunity. So some key terms when you have Mortgage Mastery Monday, if you're understanding going down and trying to get a home loan for thousands of dollars, people invest in a home once, maybe twice in a year, in their lifetime, if they're not real estate investors. Now, even though we're teaching real estate investment and teaching thinking outside of the box type of financial ways and building your billionaire brand, it's not for everyone. So these are some of the key terms that should be taken into an account. For example, what an asset is. That is something of value, such as cash or property. It's a controversial topic in the Rich Dad Poor Dad book, whether or not a house is an actual asset or a liability. Cash flow is the movement of money in and out of a household or business. Principal amount, the amount of money that is borrowed, invested, or lent. When I had my clients in regards to, getting their first home or getting a mortgage, understanding these terms was not a priority for people. But hopefully people will be able to start educating themselves on understanding that your education, your financial education matters. Just signing your name on a dotted line is one thing, but understanding what a liability is, a financial obligation such as debt, liquidity, how easily an asset can be converted to cash, profit, the money left over after expenses, and capital, the money used to build, run, or grow a business. There's some more key terms as well as debt. Borrowed money you owe to a person, business, or institution. Equity involves ownership. So in other words, it's often the total assets minus your liabilities. Some examples including a company or the value of your home after subtracting the mortgage balance. So when we talk about refinancing your home to have equity in regards to the value being different from the market value, that's money that you can use to do different things. Interest is the price you pay to borrow money or the return earned on an investment. There are two types of interest: simple interest, which is interest added to the principal amount over time, and compound interest, interest that is periodically in charge on both the principal and the accrued interest. So you can also earn interest on certain accounts, such as savings accounts through a bank. Now, the interest rate right now on savings accounts are very minimal, but here's the key thing that I want you to take away is financial education. Financial education is money and finance playing a large role in our everyday lives, but only 50% of people actually understand financial literacy, but there's 5 billion people online. And we have people like, I'm just in the US, 50% of people. So we're more taking our time and consuming our time on things that don't matter, but understanding monetary policies that influence the functionality of our economy. Making change in your own household is where you start. And so the influence of other individual choices, spending, saving, investing, education in money and finance allows us to understand financial concepts and practices so we can make informed decisions that impact our future. So when you go back and look at the rich dad lesson, that your house is not an asset. So understanding how money works and being able to tie it all together, what you understand is, again, your house is not an asset. It's a liability. So you take the real problem that in 2007, 2008, the real estate crash was not really a real estate crash. Poor people did not cause the real estate crash. The rich caused the real estate crash. How did they do that? They did something called in regards to creating financially engineered products such as derivatives. So Warren Buffett even stated the weapons of financial destruction. So understanding this key thing about money, when the financial weapons of financial destruction started to explode, the real estate market crashed. And who did they blame? The poor and the middle class. And that is the problem and why Adrian Mays and Inika Gaines with CCC Because We Care Foundation are putting these things together for people to understand how money works. So understanding the next step as well, that again, in 2007, there was $700 trillion in financial derivatives. I didn't even know this was a word until I did my reading today. But 2024, it's estimated to 1 quadrillion in financial derivatives. Adrian said, goodness gracious, quadrillion? I never said I wanted to be a quadrillionaire. I was really aiming high for a trillionaire, a quadrillion. So again, examples of derivatives are equity, fixed income, forex, credit, interest rates, commodities. These things are contracts that are created. And that's so funny because that's what the rich do. And so why not be a part of the game and understanding how these things work? And it all starts with you. So tomorrow is Tax Savvy Tuesday. We're going to talk a bit about why the rich pay less in taxes, but it really sums it up in one slide. They pay more in taxes because the rich don't work for money. As long as a person works for money, they'll pay taxes. Simple and easy. I could have made this all of a 1-minute video. Understanding that concept and understanding that promises to raise taxes on the rich, the actual promise is to raise the taxes on those with high incomes. So I love my Democrats in regards to everyone talking about they're going to lower taxes for the higher income earners. They're talking about doctors, actors, and lawyers, not the real rich. The real rich are the entrepreneurs and the investors, and they know that. And that's the crazy thing is, but the key thing is of the mission of the Rich Dad Company is to educate the financial well-being of humanity, and that starts with home life and one person at a time. See that typo? So, so here's the great thing about understanding the journey and understanding together how we build this billionaire brand. We understand that every single day, Adrian Mays is going to be live, providing information that aligns with the Rich Dad, Poor Dad book, and understanding too that, again, we'll get to the game part, but we got to understand the foundation first. So jump into the Random Acts of Kindness community and submit any questions that you may have about these ideas that are presented before you. Because again, the great thing is about building a community is having somewhere to go and land and be safe in regards to the opportunities that you have. So go right to the tab here for the Random Acts of Kindness community and click on the Monday Mastery. And we're going to put the information, this video will be posted here. Every single day after your video, Adrian Mays is going to post the video in here, and you can leave comments or questions that you may have about this opportunity. The automation portion is going to actually occur by being able to have things automated and go to people and go to the 350 people that we have right now in our community. And the key thing is to grow and build together. We literally have an opportunity, my friends, in order to understand how money works. And if you don't take the steps in regards, nobody's going to do it for you. Doesn't matter your age, doesn't matter what anything, but the key thing is to be just keep going. The road is not as easy, but the one thing about this road called life is understanding there's something that you can do and you can't do. You can make excuses all day, every day, in regards to what you don't have or what wasn't provided for you, what you didn't understand. But what you can do is jump into opportunities that can be able to help you grow and build. That's what we are creating here with Being the Change in CCC Because We Care Foundation. Yes, we want you to submit your ideas to the community of what you seek and actually grow and build this world. But the key thing about building and growing, you have to build your mindset. That's something that we can't do. Because again, every step that you take, every moment that you actually hold back or even, I mean, it's nothing wrong with working a 9 to 5. I've done it, right? But the key thing is about even understanding the growth process. You have to do what's best for you. Taking on opportunities such as these, cash flow and how money works, and understanding that you can listen to billionaire mentorship is just by picking up a book. And so I hope you were able to actually get some insight here today. And tomorrow, like I said, tune in at 4 p.m. for Tax Savvy Tuesday, as we're here live every single day. The mission, like I said, with CCC Because We Care Foundation, we thank everyone that has been on board with us having 15 years in regards to our basis, but we're just getting started. Now having a direction for our AI work and learning experience program and being able to be consistent to allow this information to show you what might not be taught in the schools. Some people may know it, amazing, but giving you the foundations and the things to grow, build, and have that billionaire brand that you can actually become bespoke, unique within your vision and your why. So drop in the comments if you're able to get some value from this video here today, and showcase some of your random acts of kindness. Because again, the random acts of kindness every day going live at 4 p.m. is giving the education to you. So hopefully you enjoyed it, because Being the Change, because we care. Your financial education matters. How we end every video. I can, I will, I must. Let's go. Get to the community. I want to hear those comments. Deuces.